Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns and Seeking Alpha. Today I want to talk about BlackBerry. So BlackBerry just announced their Q2 2022 results, and it's not a break or make thesis for either the bears or the bulls, but there's still a lot here to be worthwhile digging into. So here's the thing, right? It's been a really difficult year for shareholders, and the stock has just been all over the place. It's very difficult for investors to seriously consider this position. But anyway, let's try and be objective here. So results came out and the top line was down 32% year over year. Okay, it was always going to be expected to be down substantially. So in that light, they actually beat consensus and the share price is up more than 6% after hours. Now, is it going to remain up for the day? I'm not really sure. I mean, as we dig through, there's really not a lot to hang on your teeth here. So as we look through, CEO John Chen doesn't really give investors clear instructions as what its guidance is going to be for the rest of the year. What we do know is that the IoT business has probably been through the most difficult quarter, and that the headwinds for Q3 and Q4 should abate, and it's likely that it's probably going to come in flattish for the year. The big aspect that investors are really hanging on to is the biggest portion of its business, which is close to 75% of its business, which is cybersecurity. Cybersecurity is doing relatively okay, so it's kind of growing sequentially slightly, so that for fiscal 22 as a whole, it's only going to be up in the low single digits. Okay, that's good news, right? If you remember, and if you look in the background, you can see here that cybersecurity names, aside from FireEye, which is the green one in the graph here, that is doing a divestment of its hardware business. Aside from that one, in the past 3 months, cybersecurity names as a whole have been quite steady, quite strong, particularly as many of the high-flying stocks have been kind of slowed down substantially in the last 3 months. You can see that the cybersecurity has been one space investors that just couldn't get enough of. And in that light, BlackBerry is actually down 28%. So it should be shining. It's not quite shining in its crown jewel. So it's difficult to get really excited here about BlackBerry. BlackBerry has these timeless goals where it's looking to get its gross margin close to 80%. Okay. As we look through in this quarter, they've taken a step back. You can see that in this time last year, gross margin was 77%, and right now they've come down to 64%. So it's close to a 1,300 basis point compression year over year. So it's kind of difficult really for investors to say, okay, yeah, to get really behind this name. Another thing that I want to highlight on the positive side of the equation, BlackBerry made 12 million of cash flows this year. That's reasonable, right? But then you remember that last year they made 31 million. So it's difficult to say that this company is growing in intrinsic value. And that's the thing, right? So when you come to value this investment, many people have written to me saying, oh, Michael, you don't understand that BlackBerry is a deep value stock. Nearly 15% of its market cap is made up of cash. That's fair at one point, but since the quarter ended, they've deployed nearly 240 million of cash towards buying back their debentures. So it means that right now, it's actually closer to 10% of its market cap is made up of cash. On another way to look at it, on a price to sales metric, BlackBerry is priced at approximately 7 times forward sales. So I kind of looked around, and in cybersecurity, so Palo Alto is priced also 7 times forward sales. It also has similar, those kind of mid-70 gross margin profile. But Palo Alto is a terrific company. It's growing at approximately 25% year over year. Can't say the same about BlackBerry. So BlackBerry is a business that it's very, very unpredictable. It's going through a tough period right now. It's difficult to be particularly excited to pay 7 times forward sales. In any case, if you want to find out what kind of stocks I'm actually deploying my capital into right now, don't forget to check out my marketplace. It's called Deep Value Returns. I'll tell you the stocks I own. You're welcome to do a free trial. You can unsubscribe anytime before the 14 days. You're not going to get charged anything at all. And you come in and you know someone's done the due diligence for you, and you know that someone is finding new investments that are worthwhile investing, very selective investments that are actionable investments with solid prospects. As always, I hope to see you next time. Okay, bye.